So we're supposed to have this massive rainy season coming to us this year called a Super El Nino. Who knows if it's going to be true or not, because it's given to us by these meteorologists and weather people who are trying to predict the future. And if I was in a job where I could get things wrong 50% of the time and still be employed, that would be awesome. So I'm not really putting a lot of stock into what they're saying just now until I start to feel raindrops. But this isn't a podcast about those who want to go skiing. Welcome to Covering HOAs with One Hot Mic. All right, so I'm going to give you a few statistics, and I'm not going to share what these are regarding. They are statistics from the years 2020 to 2024, and they represent fires of a certain type of ignition point. In that time period, there were 12,141 fires. Annually, there were 15 deaths, 171 injuries, and $241 million in property damage. Those fires were caused by grills, hibachis, barbecues on balconies of condominium units. The gas grills involved 76% of those fires. A few years ago, we started to get some pushback from our insureds because carriers were making recommendations like, we need you to prohibit the use of barbecues and grills on balconies. And that's disappointing because we as unit owners, homeowners, we want to be able to cook on our balcony, especially in a community that doesn't have an open space with a community used barbecue. I mean, I love the taste of a good grilled steak. So I don't want to have to go out of my way to make that happen. I respect that. However, more than 12,000 fires were started annually, and insurance companies started to say, if you don't prohibit that barbecue, if you don't prohibit that grill and have the unit owner remove it, we're not going to insure you. Which means the preferred carriers that you may have had access to up until that point said, go find insurance somewhere else. And that insurance somewhere else is in the surplus lines, in the excess and surplus lines market, which premiums are 3 times what you're paying now. And it's something that could have been avoided just by prohibiting the use of the barbecues or the grill. I bring this up now because on August 2nd, there was a first floor patio caught fire, destroyed a 51 unit condo complex, injured firefighters, and displaced more than 150 people. Now, the association had a rule that you can't use barbecues per the California fire code, which is you can't use them on a balcony that is covered unless that covered space has fire sprinklers, and you can't use them within 10 feet of combustible structure. The fact that the carrier has stated their requirement, and it's no longer a recommendation. It used to be, we want you to do this. We want you to remove this exposure. Now it is, we don't want the exposure to a fire loss due to a grill or barbecue on a balcony. So you have to prohibit them and have them removed in order for us to consider you. And the carrier is going to do an inspection. And when the carrier does an inspection, they're going to, if they see barbecues, grill or grills on balconies, they're going to start asking questions. I thought you had prohibited the use of barbecues. What are you doing? Because we saw 1, 2, 5, 10 in your community. How are you addressing this prohibition if we're still seeing them on inspection? Which brings in liability into what we're going to discuss. So this fire starts because one owner decides to barbecue and loses control of the flame and burns down the homes of 51 other unit owners because he wanted to have whatever. The fire insurance policy for the association is likely, I'm not going to say guarantee because who knows, and I don't want this to come back and haunt me, especially considering we are absolutely recording this and I'm absolutely sharing this with anybody who hears it. Fire insurance policy for the association will most likely pay for the damage, repairs, remediation, replacement of property. Each individual owner's HO6 policy will most likely pay to take care of the unit owner's damages to their interior, personal property, and the loss of use, meaning they have to go live somewhere else because they've been displaced. The insurance company will cover that cost, whether that's a hotel stay, renting another apartment, or renting a home, depending on what that person's needs are. And mainly that's because this one person can't, if this one person affects the entire community in this fashion, in a fashion that keeps the entire community from being insured, then that's a serious problem for that one person. I have never seen, doesn't mean it doesn't exist, but I doubt it at this point. I have never seen an endorsement or an exclusion for balcony fires. That is to say, I've never seen a carrier exclude damage caused by fire when that fire started on a balcony from some cooking device. What carriers do is they try to control their exposure. They try to manage the risk that they're taking on, that they're allowing to transfer, by putting in these prohibition rules. We need you to prohibit the use of cooking equipment on balconies. That's how the insurance company is going to become interested in the community, assuming all other things are acceptable. And when you don't do that, the carrier doesn't want that risk, obviously. So instead of excluding the fire caused by, the carrier says, I'm not covering it at all. And that is, I'm not buying into this. I'm not allowing you to buy an insurance. I'm not selling you an insurance policy. You're not going to get insurance from us because we don't want that exposure of those barbecues. So again, off you go to surplus lines. Because, and I've seen this many, many times, association says, or board says, okay, well, what's the cost? What's the additional cost for a policy that with a carrier that would allow or doesn't require us to prohibit the cooking on balconies? And a couple of times they've even said, all right, that's the price we pay for allowing our owners to cook, to use barbecues and grills on their balconies. Personally, I think that's a terrible decision. The fire code being what it is, the insurance company's desire, yes, this new insurance company has said, we won't make you prohibit it, but we're going to charge premium for it. At the end of the day, what you've done is exposed your community to an immense amount of liability, both general liability and directors and officers liability, because you did something that was clearly not okay. And I guarantee you, even if you had a vote of the membership and you had 100 members and 99 of them voted for the higher premium so that they could still cook, they could still grill. One of them is, if one of them starts a fire, all 99 other unit owners, regardless of how they voted, are going to sue the association and certainly sue that person who started the fire. And their lawsuit's going to be based on fire code says no. The insurance company, rather than excluding things, controls what they write, what they accept through underwriting. The more concerning thing, potentially, is the actions of the board, even when barbecues, grills are prohibited. What sort of practices do you have to police that rule? What do you do when you see someone has a barbecue on their balcony? Do you inspect regularly? Do you walk through the community and make note of items that are in the community that need to be addressed? They may be in, most likely they're in, or at least in this case, we're talking about things that are in the unit owner's exclusive use space. So their balconies, their patios, courtyards, things like that, backyards. That could possibly be or could possibly lead to a claim against the association. Because if you don't do that, just having the rule doesn't protect you. You have to have the rule. You have to share the rule with the membership. And then you have to police the rule by regular inspections, notices to the unit owner, calling to hearings. This is where your legal counsel jumps in. How do we properly enforce this rule so that if there is a problem, we can show the insurance company we did everything we were trying to do everything we needed to do in order to avoid this type of loss, and that person ignored our rule. Now you're going to be involved in something if this happens, but that's a better position of defense than is, well, we didn't like what that other insurance carrier wanted us to do, so we found an insurance carrier that didn't care. Not enforcing the rule, really close to not having it at all. So you have to enforce the rule. And if you do have a fire and don't enforce that rule, there's a general liability concern. Somebody's hurt in that process. There's a directors and officers concern for the decision that was made not to enforce or not to have the rule at all. This is one example of a community doing what they're supposed to do. This community had a rule. I don't know how they were enforcing it. I don't know what their background or their back checking was. But if it was good, if it was right, okay, great. You did what you're supposed to do, and we can defend you. If they missed a step, they're going to be exposed, and it's going to be probably pretty bad. It all boils back to risk management. How do we avoid risk, control risk, accept risk? What are we going to accept? And transfer risk by insurance. In this case, how do we avoid risk? We try to avoid risk by prohibiting the use of barbecues. That's more of a control aspect. How are we going to control the risk of fire on a balcony? We're going to prohibit the use of a barbecue, but we don't have complete control. We don't have autonomy. We can't go to every unit and just make sure. So we can't necessarily completely avoid the risk. We can just try to control it. We try to control it even further with those inspections, fines, hearings. See, some CCNR even would allow, again, legal counsel, but some CCNR would even allow the association to enter a unit and remove a barbecue or a grill that was prohibited because it's a life safety thing. And that's where the other aspect of this community that said, we don't like what the insurance company said about prohibiting barbecues, we're going to go find one that doesn't care. It's not about whether someone can grill. It's whether you're going to burn a building down and kill somebody. That's the scary part. It's about life safety. It's not about grilled chicken. So when you see that rule, you understand that rule, follow that rule, because you're caring for the membership. You're caring for other people and making sure they stay safe. I had another community recently reach out and ask about rules in their fitness center. They have a pretty extensive fitness center, bunch of equipment, and there is one owner. This is a large scale master plan community, but one of the owners, or a few of the owners, want to be able to, or want permission to let their 14-year-old child use the equipment, use the fitness center without supervision. The rules of the community state that no one under 18 can use the equipment without supervision unless that person is in a very specific training session with a contracted fitness trainer, physical trainer. So that's the rule. Now, where did they get that rule? Why did they choose 18? Because the manufacturer has a warning in all of their material. Manufacturer of the equipment, the gym equipment, has a warning that persons under the age of 18 should not be allowed to use this equipment, or should not use this equipment without supervision. Association wants to allow this person, make an exception for this person. They called me and asked, what do you think? Would that be okay? And my answer is no, it's not. You made a rule based on the manufacturer's recommendations. If you change that for somebody, you just expose yourself to all the liability that the manufacturer is trying to avoid. And they're not going to take any of it on because you just broke their rule by letting someone use the equipment that was only 14 years old. Now, I'm not saying that a 14-year-old can't handle it, but you're opening yourself up to a problem when you invite this kind of liability exposure in. Risk management. Avoid the risk of someone under the proper age uses the equipment unsupervised and sustains an injury. You've set up a rule. You followed the manufacturer's advice. That's your expert here. It's not legal counsel. It's not insurance broker. The manufacturer's advice is no one under 18. So you set up your rule based on the manufacturer, based on your expert. And then you totally ignored what the expert said and went on and do your own thing. Now you got a problem. Because the business judgment rule says make decisions in the best interest of the community, make decisions in good faith, and make decisions seeking the advice of experts. We've broken two of those rules with that one because we haven't made a decision that's in the best interest of our community. It's not in the best interest of our community to invite liability exposure that doesn't exist. And then the second one, obviously, is you got expert advice and you didn't follow it. You did for a while, and then somebody came in and said, I would like an exception, and you as a board want to be nice. You got 1,000 homeowners. You might have 1,000 now exceptions to your rule Because once one person figures it out, everyone else is going to say, well, I have a 13-year-old child and I want him to be able to use the gym. I'm not at home all the time, so I want him to be able to ride his bike up to the gym and go, I don't know, power lift, whatever 13-year-olds do. So when you deny the second person their requested exemption, now you created discrimination claim. Why did the Smith family get to do that, but you're not letting the Doe family get an exception? No. Boil everything back to that risk management process. Avoid the risk you can avoid. Control the risk when you can. Accept the risk you have to. Transfer the risk you can so that you don't have to accept it. One final example. Community that was built in late 70s has electrical panels that insurance carriers today don't want to see. Same reason the barbecues are being prohibited from balconies. Carriers don't want to see Zinsco, Stab Lock, Federal Pacific, GE Sylvania, Challenger that were built in a certain period of time, because those start fires, or at least have known to be dangerous and potentially start fires. So carrier says, I will accept your risk. I want to avoid the electrical fire caused by these panels that are known to be a problem. So you, HOA, need to replace those panels. HOA says, okay, we'll put a plan in place. This is 5 years ago now. Okay, we'll put a plan in place. We'll get a special assessment to allow us to get a loan so that we can pay for this replacement. Special assessment vote fails. 1 year goes by. Renewal comes up. Mike Berg asks, hey, did you guys get that project done? No, our special assessment vote didn't pass, so we just kept on going. Okay, I'm going to have to tell the carrier that. Are you ready? Yeah. Are you going to get another plan in place? Are you going to do another special assessment or another vote to get that special assessment to replace these panels? Oh, yeah, sure. We'll do that. Great. Tell the carrier what the plan is. Carrier says, okay, but if they're not replaced by renewal next year, we're out. Year goes by. Hey guys, have you had those panels replaced? Oh no, we didn't. Weren't able to get the assessment passed. Okay. Go back to the carrier. Carrier says, we told you last year. Carrier issues notice of cancellation effective the renewal date or the effective date, stating we're not going to move forward on this project because of underwriting reasons. Electrical panels do not meet our appetite. We move that account into the surplus market. Premium goes up about 3x. And in this case, that would have been roughly going from $75,000 to $225,000. But that new carrier said, okay, we understand that you have these electrical panels. You need to get them. You need to put a plan in place through the next 12 months and start that project to get those panels replaced. So she said, great. So something they could have done 5 years ago when they were with a preferred carrier and paying $75,000, a year is now with a surplus lines carrier, they're paying $225,000 and they still have to get this loan, or they still have to special assess the membership in order to fulfill the demand of the carrier by replacing those panels. It would have been a lot cheaper here than it is here, here, here. And the cost of upkeep is always cheaper than the cost. It's always lower than the cost of replacement. I can make things last a long, long time if I start early. So now this community is really strapped. We go another year, and the carrier that they're with now, that was the 3x increase in premium. Did you replace the panels? No, we have not replaced the panels because we have other projects that we're spending our money on. Okay, carrier says, we'll stay on this risk, but we are now going to exclude fire started by your electrical panels. If you have an electrical fire that the ignition point is these panels and these breakers, it's not covered. That's not so far different from the potential for there to be an exclusion for barbecues on balconies in the future, because the carrier doesn't necessarily have the ability to control that exposure. They may start excluding it completely, in which case you have done what? Accepted the risk. You have decided, or it has been decided for you, if you want to take it in that direction. It has been decided that if we have an electrical fire, we're going to accept the cost of repairs. We are going to come up with that ourselves. That's going to be darn hard to do when we can't even get the money to make the electrical upgrade that would have kept the fire from starting in the first place. And premium is now double what it was the year before. 75 to 25, it's now 450. And you still have this problem. And now you have a huge exposure. Bottom line, keep your risk management procedures in place. Avoid risk, control risk, accept what you can't avoid, control, or transfer to an insurance carrier. You don't want to take on things you don't have to. So before we move on, be sure to follow, subscribe here, and feel free to share. I like that. Like this. Ready? I was on a podcast for a management company, ACCU, in Colorado. The CEO of that company runs a podcast, hosts a podcast, I should say. He hosts a podcast called at HOA Life. And I had the privilege of joining David and then one of my colleagues, Eric, and discussing the insurance market in Colorado. So check that out, at HOA Life. See, sharing is caring. In Hawaii, there is a saying. It's not who you are, it's how you are. Are you polite? Are you respectful? Are you kind? Are you generous? Don't tell me who you are. Show me who you are by how you are. Show me who you are by how you treat others. I'm going to know real fast if I want any of your energy in my life, if you treat others like dirt. How we treat others is one of, if not the only thing we can control in our lives. I can't control whether this coif of hair stays where it is. I can't control the fact that I don't grow a beard as fast as some of my friends. But I can control how I care for other people. It's a level of a thing the Hawaiians call mana, which is an energy that flows through all living things. I'm not getting into a religious debate. Let's not go there. I'm just saying that there's a spiritual feeling of spiritual force that the Hawaiian people, certainly the traditional Hawaiian people, believed in. No, I'm not getting into a religious debate. However, I could say, much like the Holy Spirit to a Catholic or a Christian, it's something that is inside of you. And it's a spiritual gift. It grows stronger with your righteous actions, your good deeds, and how you care for, how you respect others. But it can also decrease with bad choices and disrespect. So I say to you, go out into the world, be good humans, and grow mana. Meke aloha, mauloa, aloha, kako. Thanks for checking in. We'll see you next time on Covering HOAs with One Hot Mic.